The second longest bull market in history has already celebrated its 8th year. As another earnings season gathers steam, investors are hoping it'll continue. And it looks like it might. Analysts raised their year-on-year second quarter growth forecast for the S&P 500 to 8.8%.
The first quarter of 2016 was the bottom of the earnings recession, so it's much easier to get a 15 or more % growth that we saw in the first quarter when you're coming off of a negative number. This quarter, like you said, 8% growth. It's still pretty solid, but we're still coming off of weaker numbers. But that being said, I still think it's a good sign because you're seeing right now about 6 of the 11 sectors in the S&P 500 expected to have positive growth. We've got a few of them in the double-digit growth category, like financials, technology. Technology is a huge standout.
One of those standouts is Netflix. The movie streaming service added 5.2 million new subscribers last quarter, breaking through 100 million customers in total. Another one is Google's parent, Alphabet. Advertising sales grew about 18% to more than $22 billion. And among the financial companies that have reported so far, more than 70% of them delivered better results than estimates. Observers believe that the robust momentum from these sectors and others may supercharge the economy.
While we've seen a fair degree of volatility, particularly from one industry to the next, we do think that the second half of the year will likely show continued growth on the part of the U.S. economy. We may see some acceleration as we move into the fourth quarter from that, but we still are expecting to be somewhat range-bound if we look at GDP as being the measure of economic activity. Still expected to be in the around 2%, slightly higher than that 2% level.
Under the Trump presidency, equities have soared, partly on the hope of market-friendly policies. But some investors are worried that the administration is having difficulty passing bills. The speculation is that lofty valuations based on potential tax reform and big infrastructure spending may be too high. But some analysts say that concern is unnecessary.
Management teams have not priced in any fiscal policy, and neither have the consensus numbers. So any benefit that we get will go directly into the numbers, and that will definitely push the market higher. So we feel very comfortable where we're at as long as the economy can keep chugging along.
The U.S. is enjoying strong consumer confidence and low unemployment. While not every business is turning a profit, signs may be pointing to a happy 9th birthday for this economic bull. Julia Sun in New York for TRT World.